Back to Market on Close. We're taking a look at Starbucks. The stock is down 14% over the last 52 weeks and is due to report its earnings after the bell today. The coffee giant is expected to report fourth quarter EPS of 55 cents on $9.3 billion in revenue. Today's earnings will conclude the first full year in charge for Brian Niccol, who joined last September after leaving the same role at Chipotle. And now it's time for Options Corner. We're going to feature Starbucks ahead of their earnings, talk about this company and some of the options action we're seeing on it. Joining me in studio right now, Alex Coffey, the co-host of Next Gen Investing and our senior equities contributor here on Schwab Network, to talk about Starbucks in advance of this, what I would argue is an all-important report. You know, it marks 1 year into Brian Niccol at the company. Expectations are very mixed for what's coming in terms of seeing any growth, if they can put up any growth. Same-store sales, that very important number, expected to decline. So, you know, the question for Starbucks is, what is it going to take to get a positive report? Because most of what you read doesn't show a lot of signs that there will be one.
Yeah, and it might be one of those situations, Marley, where the good news isn't about what just happened, but it's what it's on the verge of happening. And the reality is North America has been a tough market for Starbucks over the last now 7 straight quarters. If it disappoints again and misses or even hits the expectation for same-store sales, which are expected to decline just modestly. What you really notice with Starbucks, and even just going back to the last report, though, is this stock is stuck in a rut like the turnaround. And so, like you say, what is going to excite Starbucks investors? It's largely going to be what Brian Niccol and team say about how that recovery is coming, but also tangible timelines that you're starting to see progress, because the numbers, they don't show it yet.
Yes, and he's come out and said it's taking a little bit longer than planned, and you have to be patient with us, and we're working on the strategy, and we're trying to go back to the original coffee house concept. And I saw some notes earlier today that indicated that they don't actually really need to show a lot of growth. They can even have a miss and that 7th straight quarter of declining same-store sales here domestically. But that as long as they're showing some progress in some way, that could be enough to get us sort of out of this channel that they've been living in.
Yeah, and one thing, too, is it does seem that the international markets, particularly China, are starting to, bounce back a little bit for a company like Starbucks. So if you can really stop the bleeding here in North America, particularly in the U.S., it's not that hard to envision Starbucks starting to turn the corner, and we might be in the process of that happening. You talk about the channel, you talk about the performance over the last 3 months. When you look at Starbucks over this time frame, I've said it's gone sideways. One thing that really stuck out to me, if you go to basically 9/1, which is September 1st, it cuts out that last little piece there. But we've traded in a range between 78.41 if we're really going to be sticklers here, and 89.99. Let's call that 90. So 78 and 90 really over the last 2 months. What I thought was the most fun part about that, with the stock trading around 84, the market maker move, which we know is just an analysis of the options prices, and then kind of giving a range that would basically be one standard deviation worth of outcomes, $6 and some change. Again, doing some rounding from 84, $6 lower, 78, $6 higher, 90. So if it just does what it's supposed to do and kind of test those bounds, you could see a test of this channel. But it doesn't necessarily mean that it has to break out of it. So more of the same could be in store, even with a good news or bad news.
And as far as the options actions go, it's a very interesting day to be reporting, because they're reporting against some market heavyweights on Fed Day. Are we seeing increased activity in Starbucks, or was it a regular trading day?
Yeah, and it's typical, right? Around an earnings event, even though it's going to probably be overshadowed by the Fed and some of its mega cap tech peers, there's still going to be increased, options activity and volumes. And there was. The sizzle, which, measures today's volume versus the last 5 days volume, was about 4 on my last check. So that's suggesting about 4 times more than it typically would be, which isn't unusual around an earnings event. When you start talking about areas of interest, though, and some of that volume intraday, some of the areas that stuck out, the 75 level really sticks out for a lot of ways. It's one, the area with the most open interest, and the vast majority, we're talking 90+%, is puts. It was also one of the highest areas of traded puts today. So that would be down here. So that's going to be outside that move. That would be the lowest level we would have seen in 3 months plus if it does get down there and test that, perhaps hedging activity. Now, to the upside, there's a lot of things to consider. A lot of calls traded at the 87, 90, 94, 98. To get to 98, we basically be getting back to all the way those highs 3 months ago. And of course, well well beyond not only the market maker expectation, the upper end of this channel, but basically doubling that in terms of the move. But the most interesting point by far, at least for dealers and options traders, is perhaps 82. And the reason 82 is the most interesting is it for this October 31st expiration is the max pain level. What does that mean? Well, that's the area. If we were perfectly at 82 on Friday, basically that's the area where the most amount of options would be worthless. All those 75 puts, and then 82 is also where the majority of calls have traded as well. So very interesting level, and that's about $2 lower. So it'd be a muted move, but a damaging one for those who own options.
Yeah, very muted move right now at 83.65, so very close to that max pain level. Alex Coffey, thanks for being with us for Options Corner today.